Morning, everybody. We're just waiting, I think, for Scott to join us, and then we will get going with the meeting.
Hi, Carolyn. How you going?
Morning, Doug. Good, thank you.
Coming through loud and clear?
Yes, indeed.
Beautiful.
So I might just ask everybody to just mute their microphones so we don't get any feedback. So if everybody can do that. We will take questions. So you can put a question in the chat box by just clicking on the bottom of your screen. You'll see a little bubble that has chat on it. So you can type a question in there for us to answer along the way, but we will also stop at the end of the presentation and ask anybody who would like to ask questions to unmute their microphone as well if there's anything along the way. So hopefully Scott's not having problems with his internet. So what I might do is start and hopefully he will join us very shortly. So firstly, thank you for registering for the webinar. It's important for us at the moment. There's so many moving parts going on at the moment with government assistance, government grants. I know that there's even been, the property, sort of large property groups writing to the government to get clarity on whether, what they can do with tenancy rents, and there's all sorts of things happening. It's a very fast moving environment in terms of what options are available for people in terms of support as we move through the difficult weeks ahead. So I'd like to firstly just talk a little bit around how and why property is such an important part of people's wealth and wealth creation. As you know, if you've spent any time talking with the team at WealthMed, our view is that property is a long-term asset, and it's very important that we don't make significant short-term decisions on long-term assets that will return to sort of normal results over time. So importantly, property is one component of our clients' portfolios, and often property comes along with the debt, with leverage. Now, we have a strategy at WealthMed that we recommend our clients put significant amounts of cash in their offset accounts against their home loans, or fully offset their home mortgages rather than pay them off. Now, that strategy is really important at the moment because going and asking a bank for a loan or to redraw capital at this point in time will be quite problematic without jobs and things. So actually building an offset account, having the cash there and having the discretion to use it to either cushion against tenants not paying rent at the moment, and potentially even subsidising personal lifestyles if income is a problem for partners. So whilst a lot of our clients might be doctors or medical professionals who are employed, a lot of their partners aren't, and the two incomes are used to fund household lifestyle and pay expenses. So having a very large amount of cash in an offset as opposed to paying it off a home loan is a long-term strategy we've used for exactly this reason. It's a risk management technique that we use as financial advisors when we're working with our clients. We do have clients say to us from time to time, oh, look, I'd feel better if I just pay off the loan. Well, in times of uncertainty and difficulty, access to cash and lots of it is the thing that will get you through difficult times like this. So this morning, I would like to hand over to Scott Guilford and to Doug Scragg, who work in our property division and provide amazing services and advice to all of our clients in the property area. And they're going to actually take you through what their views are, some things that are available to you, and what the next steps might be in terms of getting advice or assistance if you need it to support you at this time. So I will hand over to Scott, who will take you through some points that he'd like to share with you.
just quickly while Scott is probably just loading up his screen. So my name is Doug. Today, Scott and I are going to talk to you about a few elements of the property market. So I'll let Scott do a quick introduction and then we'll go from there.
Thanks, Doug. Hopefully you can all hear me well now. Yeah, I think the property market's obviously a pretty hot topic right now. Everyone's sort of fairly concerned about it. But I think from our point of view, there isn't actually much to be concerned about right now. Obviously, this advice today is relevant to what we know as of today. Things could change fairly rapidly, but hopefully from all we've seen from how the virus has been relatively contained, some of the charts seem to be slowing, if they're not coming down yet, but slowing. And certainly all the governments with these massive stimuluses they're putting out there is certainly having a good effect. In our opinion, the property market is actually fairly stable, and it's going to be fairly stable. Long term, there'll be no problems with it. There's all sorts of things over the years that have caused ups and downs in the property market, and it continues to bounce back and steadily grow. And that's what we think will still happen here. Obviously, short term and medium term, there could be a few issues with that where it comes about, but Doug will take you through that in a second. As I mentioned as well, the governments have come out with so many great stimulus packages to keep the economy moving, or at least keeping it treading water. Yesterday's JobKeeper package was a real game changer in my opinion, and I'll take you through that a little bit later as well. So I'll pass you over to Doug now and we'll get on with the property market.
Thanks for that, Scott. So look, I just want to really answer the first question is, what effect is COVID-19 having on the property market right now? And the main answer is uncertainty. Uncertainty about people inspecting properties, people being able to buy and sell properties, and people being able to have jobs in the state of the economy. So with this uncertainty, again, it brings a few questions about the market. What we do know is Australia is likely to go in some sort of recession. It's a real challenge for the Reserve Bank and for governments to do all they can right now to support the economy. They believe that the current packages will be enough, but we do have a statement from the Reserve Bank governor that they will go and do more if it's required to help the economy. And that's all you can really ask of our government. So they're doing pretty good with that. The outlook for property recovery, when will that happen? Not quite sure yet. What we do know is once coronavirus is finished and sorted, Cameron Cusher from realestate.com.au, a property expert, he believes that the housing market will be one of the strongest areas of recovery in Australia, and especially compared with areas like tourism and education, which will recover, but they will take a little bit longer. As soon as the confidence does return to the economy, it's reasonable that people will start to again borrow and look again for housing options. The RBA is at 0.25% at the moment. It's the lowest that can drop the interest rates. And they have announced multiple packages to support the banking and business sector. And that's to ensure that credit is freely flowing, trying to support businesses and stopping them from shedding their staff. All the amounts of the stimulus in the economy will be very positive to the market once we get past COVID-19. So the question for you now as our doctors is, should you go ahead now or should you wait? So we believe that the market is in a position where you can actually do stuff now, and it's a good time to do stuff now. Property, we believe at WealthMed, is a long-term investment. That's how we've always treated it. We believe in time in the market, not timing the market. You want to accumulate your assets as quickly and as financially responsibly as possible. You need time for the property to grow. It's not going to all happen at once, and you need time for the debt to be repaid. And that's preferably done by the taxman and your tenants as well. So stalling now, if you don't need to, will just make things harder for your overall financial plan and strategy. So we see from all the reports that we're getting that coronavirus is having little effect to the market for the long or medium term. It's really just about this short-term stalling at the moment. And that's how we see property prices. They're remaining fairly stable and consistent. There may be a slight dip, but we're not expecting anything drastic because it's mainly a reduction in turnover of property. As opposed to something like the global financial crisis, it's totally different situation. This is a virus pandemic, so the hardship will likely be short-lived. People often ask, should I potentially wait to maybe grab a bargain in a few months' time? And look, we really see that as speculating. It's very hard. You might not. But what we do know is if you get into it now and that property is long-term, you'll be right in the long term. So at this point in time, people with property are more likely to try and sit and hold the property. People aren't looking to get rid of property or sell property at a bargain price unless they absolutely have to. And the great news is that the government and bank support will likely help most people through those challenges. Being able to defer payments or being able to get Centrelink payments if they've lost their jobs, all that kind of stuff. We do know that housing on average in Australia over the past 25 years, housing has been growing by 6.8%. That's according to Core Logic. And throughout the last 25 years, we've gone through a number of different events, things like the Y2K, SARS, we've got Brexit and Grexit. We've got President Donald Trump, that was a big kerfuffle when he got elected. Climate change, we've got impeachment hearings, problems with Korea and Iran, Turkey and Russia, all providing complication in the world. But the property market in Australia has got through all of those with ups and downs, but we've got through it. There are a number of fundamentals that cause the property market to alter. So it's not just about coronavirus. Things that affect the market is demographics, work trends, settlement patterns, problems with getting finance or not getting finance, new government regulations or compliance requirements, housing affordability, and supply and demand is the ultimate one. So Michael Matusik is a property guru, and he suggested that he doesn't see any of those fundamentals substantially changing due to the current virus situation. So that leads me into my final section. If you're looking to purchase a home right now, it actually is one of the best times that you can do that if you are in a position to go ahead and get a property. And the reason for that is because your bank rates, the interest rates are so low. We won't see this time again for quite a while. It's great to get on now. It's cheaper to own a property at the moment than it is to rent a property. So if you're still renting, really, we should be looking to see if you can get into your first home. You want that security of home ownership rather than the risk of being potentially kicked out by a landlord if they decide to up and sell the property. And if you are doing a home, we do look to do builds as well. And when selecting a builder, that's a very important step. That's why we work with a very few select builders, ones that we trust, we know what product they make. You need to use a solid builder, a well-founded one with a strong balance sheet and long-term trades that have been working for the company for a long time, and they'll take care of each other. So all of our builders are in this position. But if a builder does go bust, you have the QBCC, which is the government insurance. In case the builder goes bust, they still finish off your house. There's no risk with that at all. If you are looking to invest at the moment, again, it's a great time. If you can, you should. Stick to your strategy. Don't let the current situation affect your strategy with property. We're investing for the long term again. It's not about the short term. We're not looking about trying to buy a house and quickly sell and buy and sell to quickly make a profit. This is long-term property capital growth. Your advisor is the one that can direct you whether now is the right time financially, and that is a serious question to ask. We don't want to put our clients into any unnecessary or risky situations. So if your advisor is saying now is the right time, it's probably the right time to go. The other thing is that when it comes time to renting a property, there are firms out there, property management firms, that will guarantee rent, and that's going to provide greater certainty, especially during this time. So ask us about how that works. The main thing is that you've got goals, you've got your overall financial plan, your pyramid, you want to get to that top, and nothing in the market at the moment is stopping you from doing that. In fact, the more we look into it, the more we realize that for our doctors, their income's being secure. Now is a great time to do it with the rates being so low and the opportunities in the market being abounding. And we hope, and it's in my opinion, that if you can do something now, one that's not only great for stimulating the economy, doing your part for the nation, yes, but the other thing is you're going to be able to get in early before, I believe, this wave of market activity that will occur after coronavirus has kind of recovered. So you're getting in before that. Hopefully you can ride some of that growth as well if that occurs. So
we've got a question just asking, which may be addressed by Scott a little later. Just, what is the advice regarding tenants in financial difficulty who can't pay rent? And is there any point in evicting somebody when you're unlikely to get another tenant? So I know we've got some answers to those things. I think Scott's going to deal with those shortly.
It's absolutely a brilliant question, and I will hand over to Scott for that one. He's gone into greater detail for that one.
Yeah, we've got, I'll be covering all of that very shortly once Doug's done.
No, that's all it from me. So, in terms of the market, I think while it's a little bit scary and you listen to the media, it's very concerning. But for those that are in a position who can do something, I believe, one, you should. That's going to be great for the economy. But two, it's going to put you in a good position as the market then recovers up. You've got to make advantage of all the interest rates being low. And there's plenty of opportunities out there right now. So come talk to us. But I'll hand over to Scott now to talk about the rental aspect.
Thanks, Doug. I think that shows on the property side of things that there is opportunity out there still if you're in a position to do it. The rental market we sort of see is fairly similar to the property market. So far, the impacts have not been very substantial, according to all the property managers we've spoken to. They've had very small inquiries from tenants. They do, of course, expect that to increase over time, depending on how long this goes on for. Having said that, the government stimulus really should look after that, and I'll go into that a little bit more in a minute. First off, though, I just wanted to cover the types of properties that you should be looking at. So obviously, when you're investing in any property, having the right area, the right type of property for that area, the right design, it's all going to help out making sure that you're in a better position for that long-term rental demand. And it particularly comes into play in times like this. At the end of the day, the residential property market is kind of stable because people do need a place to live. And whilst there could be a little bit of contracting with that, with people moving in with parents or with each other a little bit, generally that's not going to change too much. What we will cover right now is some of those questions Karen just talked about before, such as my tenants lost their job, what do I do? My tenants asked for a rent reduction, what should I do? The landlord doesn't have to pay their mortgage, so why should I pay rent? If I purchase an investment property now, will I be able to rent it? And of course, that just goes hand in hand with the question that Carolyn just asked about, is if I kick someone out, will I be able to replace them? I guess on that, right now, you can't kick anyone out. There is they have put a restriction on people affected with COVID-19 financially can't be evicted from their home. So they're awaiting the rules and regulations around that, but generally that's the case. I think to start covering it, it's probably worth starting with the government stimuluses. I've mentioned this a few times already, but they're what's going to really make the difference and help here. Already in place was the JobKeeper stimulus. With those, if you could get that, there's about $1,100 a fortnight per person. So that was reasonably good as it was. You get a couple who both lost their jobs, that's $1,100 a week. These sort of stimulus are there so that people can actually continue to pay rent or mortgages. They can go out and get their groceries. Sure, they're not going to be able to save money or do anything much more than that, but at least it leaves them being able to tread water for the time being. Not ideal, but it's helping just keep things afloat a little bit. Yesterday, you've probably heard, they've just announced their JobKeeper stimulus package. Now this one is a really big one. This is a real game changer, I think. This is where employers will be paid $1,500 per fortnight per employee to keep that employee on. And it even works out that that's a minimum. So if your employee was earning less than that, they'll actually get more now. They'll get the $1,500 per fortnight. Again, you get a couple, that doubles up. It's actually a fairly substantial amount to keep the household ticking over. That JobKeeper stimulus package starts from the 1st of March, but the first payment, it's paid monthly in arrears to employers who will then pay it on to their employees. The 1st of May, that first week of May is when the first payments will come through. So there may be a few companies out there who say, oh, I can't afford to cover that for the month, or 2 months really it is in this first one. But the banks have all got business loans out there at super, super good rates to help businesses through times like this. So there's very little excuse really for employers not to be continuing at this minimum rate at the very least to keep staff on and pay them. Just for your interest, there's a couple of websites. Business.gov.au is a super good website that's got a lot of this info on it. It's worth having a look at that. And there's also a government app you can download on your phone that if you search coronavirus, it'll come up with an Australian government app that's got heaps of info on it too, so it's really good. So how's this going to help out? I guess if you or your property manager are getting tenants coming to you saying, hey, I've lost my job, or I need a rent reduction, it's prudent to actually ask why and get a bit of detail from them. As I've sort of mentioned, most people are reasonable. Most people are gonna do the right thing in these cases and only really ask where they need to. Of course, there'll always be a few out there that want to take advantage of the situation, but I think this is where we do need to be prudent and actually get a little bit of evidence from tenants. Your property managers should be covering a lot of this off for you. Right now, there's no reason for a tenant to stop paying rent. They may have to reduce it a little, or there may be a few weeks whilst this JobKeeper payment comes in where they need a little bit of help. But it certainly should not be a time where people just stop paying rent. That's the first thing. I think it's all about, when it does come to these sort of things, is making sure that everyone's talking together, because a lot of tenants will have the opinion out there that, hey, the landlord doesn't have to pay their mortgage. I'm hearing all about these loans getting waived for 6 months, so why should I pay rent? The fact of the matter is with that is that your mortgage, if you're in financial peril, you can apply to the banks. The banks have all got slightly different rules, but you can apply to the bank to get 3 to 6 months of your mortgage frozen or waived for 3 to 6 months. However, that does not mean you're not paying that mortgage. All it means is at the end of that period, those payments and the interest that you would have paid during that time get lumped onto the mortgage. So your payments will be larger at the end of that time. And of course, you'll be paying interest on that interest. So it actually will cost you more to do that at the end of the day. So it's not costing you less. It's certainly not costing you nothing. It will cost more, but it's down the track a little bit. So it is great. It's helping people get through times of peril. But tenants need to be made aware of that, and that's what the property manager we're speaking to. They've all so far that's what they're talking to their tenants about and educating them about that. And as I said, most of them understand that and they're okay with it, so they continue to pay rent, and it's all good. Secondly, I think when the tenants are in a bit of strife and you're talking to them, we can do several things. If they need to get through periods where they need a rent reduction, it's about stipulating what those periods are and how those repayments are going to come about. There's one thing you can do is just reduce the rent for a period, and I certainly don't mean stop the rent, but reduce it find out what they can pay, and it's a reasonable amount. You know, it's not a quarter of the rent. It should be a reasonable amount. And then you set out the term that you're going to reduce it for. You've got to be really careful about just reducing the rent full stop. You're going to then have problems with landlord's insurance down the track, just with smaller payouts from that if it comes about. And then it can be very hard to get it back up. I think if you're going to reduce it, you need to be a set amount of time that says, okay, we'll reduce it for the next 3 months or whatever period it might be. Could be a month in this case now with the new JobKeeper. And then it goes back up to normal rates. Or we discuss it at that time and review it. The other option that most property managers seem to be going for is more of a rent reprieve, whereby you agree to have a term where the tenant can have reduced rent for a period, but then they've got to pay it back, just like you do with the loans. And you can set up a payment plan for that. So if you're reducing it $100 a week now for the next 3 months, you might then tack on 10 or 25 bucks a week once things come right down the track. So that's entirely up to you, whatever you're comfortable with in those. But I think either way you go, it's important to make sure that it's a written agreement. Get the property manager involved, and just formalise it so there's no issues down the track. Hopefully that answers a lot of those questions regarding what happens when tenants lose a job, what should you do? Regarding would I be able to rent it out now? How am I going to replace a tenant if one leaves? As I mentioned before, so far the rental market is still fairly unscathed from this. So people still renting out properties. There's a fair amount of turnover of that still, albeit a little bit harder. They can't have open homes at the moment, so it's by appointment. But a lot of the good property managers have got everything online these days, and it's pretty easy to get that done. Even with the signing up of the contracts is pretty easily done online. So hopefully that isn't going to be too much of an issue. Obviously, the longer this goes on, that could or could not be, but I think it comes back to just monitoring it over the period that it's required. This is not a forever thing. Other things, loans. I think I've probably covered off most of this now already, but with your banks, there are opportunities to have the loan extended out, or a grace period for 3 to 6 months. It's all on a case-by-case scenario. So it's not a given, certainly. They're looking at cases whereby if you've got a large offset account or redraw facility with plenty of money in it, they'll probably deny it. So it's very fluid at the moment. It's hard to tell what's going on. I think in a lot of cases, for us personally, it's going to be a case-by-case scenario too, where if you can keep on paying it, do so, because it's going to cost you less in the long run. If you need it, then have a chat with us and we can sort out how best to approach it like that. As I said, so far it hasn't been too bad as far as too many tenants all rocking up saying I want to stop paying rent. There's also some super good rates out there at the moment, and I think by the look of things, these are going to stick around for a long time. The way that the RBA has been putting out their stimulus packages for the banks, they're at 0.25% for 3 years. So we can see, I think from that, you can see that these rates are going to be down low for a number of years, which is great news for investors and property owners. I think that probably covers everything that we've got for you on the property. Is there any other questions there, Caroline?
So yes, we've had a couple of questions. So we did have a question about whether it's a good time to fix rates, and what sort of loans should people be looking at if they are in a position to actually take advantage and get into the market at the moment. So importantly, rates are going to stay low for a long period of time, and they could actually come down even another 25, maybe even another 50 basis points, which would give us negative cash rates. We've got a lot of countries around the world with negative cash rates from their central banks. So if you think about that, if you've got a negative, 0.25% cash rate from the central bank, and the bank puts their 2.5% margin on it, then, it could be, as low as 2.25% interest rates. So we're not recommending anybody fixed rates now. We have actually had fixed rates, and a lot of them coming off now. We had a lot of clients that saved 1.5 to 2% on fixed rates when rates were up around the 6.5, 7%. We had people on 4.99% fixed rates. Now, those loans are all coming off, and all of our financial advisors are advising our clients to, and there would be exceptions, but very rare exceptions to this, we're advising our clients to let those loans come off fixed rates and come to variable rates. Now, there will be a time when we will want to fix those rates again, when we think there's opportunity for rates to increase, and we'll be doing fixed rates for 5 years so that we can lock in the lowest rates that we have, historically low rates, for the longest period we possibly can. So it's important when you're working with your advisor to get this kind of advice, and your reviews and your touching base sessions that you do, they're all designed to put this kind of information in your hands and to help you execute changes to your loan portfolio. There's a couple of things I'd like to just summarise from, Doug and Scott and what they've had to say. I think right now we have got trillions of dollars being pumped into the economy by the government, and it's designed to help your tenants. And it's designed to help the small businesses that provide an income for your tenants. And it's designed to help the medium-sized businesses who have a lot of people that work for them. So I don't think that we should just be accepting, oh, we can't pay our rent, sorry. You need to ask the tenants to substantiate that they have applied for one of the government grants or stimulus packages that are available, because if people have the opportunity just to send you an email and say, look, I can't pay my rent, they're potentially going to do it. So I think you as a landlord need to actually say, well, no, provide me substantiation, show me the evidence where you are not receiving an income, and then explain to me why you haven't claimed the government's support. Because if you think about that, $1,100 is really, if two people, they are able to pay rent and buy food with that. And that's what the government stimulus package is designed to do. And the last thing we want, and the government wants, is your whole communities of people on the streets or mobilising to move out of their housing. So this is firmly directed to keep people in their housing so they can observe social distancing and to allow them to buy their food. So I think it's really important that we do actually say, we're prepared to give you a $50 a week rental holiday or a $100 a week rental holiday, for 6 weeks or 8 weeks, or do it on a 4-weekly basis and say, yes, we'll agree for the next 4 weeks and we'll see how that works. You don't want to carte blanche change your tenancy agreements for 6 months or 12 months and be locked into this kind of change, because we could have a significant earlier recovery than 6 months or 12 months. So I think, it's very important that we ask the right questions and work with your rental agency. And if you need some help from us, I think what would be good, if we haven't already done it, we could put a checklist together of the questions that need to be asked of tenants and what we need them to provide you and the rental agency so that you can put a temporary agreement in place to assist them. Scott, have you done anything like that as yet?
Not a formal checklist, but we can do one up. That's a great idea.
Yeah, so we will circulate a checklist with the recording of the webinar for you, as if we've got tenants out there who've joined landlords who've joined the call. We've got a few joined the call today. So the other thing I'd just like to point out, and I think this is a really important thing, many of our clients are working really long hours in very, risky kind of situations in supporting the sick people in the hospitals. And, it's a difficult time, but I think we still need to be marching forward with the things that are important to us in our lives. And I do think it's a time for our clients who are have secure jobs, albeit difficult circumstances to work in at the moment, to continue doing the things they are intended to do, because that's going to help the economy keep moving. You know, that's why we here at WealthMed, we've got our doors open, we're paying all our staff, because we know we can play a part in helping our community and to keep people employed and keep the money circulating. So I think, you know, we should all continue to do our part and to move forward carefully but confidently, based on what's important personally for us to achieve as we go. Look, we have many businesses that we work with, rental agencies, banks, financial institutions. So we've got lots of capacity to answer questions and help you navigate your way through this difficult time, because everybody will have slightly different circumstances and slightly different things presented to them by either tenants or their work environment. So we'd encourage you to be talking with your advisors and the property team on any property or loan, and the finance team on any property and loan specifics. We will all continue to work together. So if you ask a question of the property team and they need to get the financial advisor that's looking after you involved, they will. And the same as the finance division. So, you know, we're here and we're able to help you to work your way through the things that you need to do right now. So if we've got any more questions, just check as anyone...
We do have a question from David, just regarding to what evidence is that builders will be unable to complete construction, either because tradies can't work closely or supply chains of materials. And suppose with this one, at the moment, our builders have been saying that they do have supply. Some of them have been able to see this from a distance and make sure they have gone ahead and purchased additional supplies in case things are harder to come in. So at this stage, we're still seeing construction going on as normally, and being able to get the supply. Some potential smaller items like pendant lights might be a little bit more difficult to get from China at the moment. Apart from that, most of the main stuff is freely available. And the tradies are still coming out to work. The only real big thing with that will be is that the government completely shuts down that particular industry and says, no, they cannot go out to work. At this stage, that's not the case. They're allowed to go out and perform their work and continue on in their employment. That's what the government wants at this stage. And most of the tradies don't work too closely together. They do like to maintain a separate distance anyway. From what I've been able to see on building sites, is none of them have been interacting more than 1.5 meters. So that's pretty much normal. It's quite rare unless they're having to work in a real confined space, which doesn't really apply to our type of builds. Scott, did you have anything you wanted to add to that?
Yeah, I think I'll just add to that. We've had a few clients ask us where they've already purchased a block of land, and should they build now or should they wait? And the answer to that is a real easy one. It's to build now. Keep things moving while you can. You've got to build soon anyway, so rather than waiting 6 months for this to be over, you're just going to pay interest on the land and then interest on the build and the land, rather than paying the interest on the build and the land now and renting it out. And even at reduced rates, if you had to rent it out and get people in quickly and reduce the rent, we've run all our numbers so that we can stress test that, and it still works out fine. Even if it was going to cost you a couple of grand a year by reducing the rent $50 or something like that, it's a drop in the ocean really. It's neither here nor there. The only danger of that, of course, is that you're halfway through a building and the site gets shut down for a period. I think with that, you're still in a better position. We've run a few numbers, and okay, it gets shut down for a few months, and then they're back on there. It seems to be okay. So far, too, it seems that the trade supplies in other countries are more as an essential service, so they can still get supplies through. So it's just hard to tell. It's a bit of wait and see on that one as to how it affects you. But in the meantime, I think our advice is to keep things cracking.
I think from a financial planning point of view, we don't want our clients to hold unfinished property or loans for an extended period of time when they are actually able to move forward. And I think the point is you might need to rent it out at a slightly lower rental for the first 3 months, or, you know, there's no reason why you can't put a tenancy agreement in place that says for the first 3 months the rent is $100 a week less, and then it reverts to normal. There are things that you can do in your tenancy agreements to still get the property finished and rented. There are people whose tenancy agreements have come to an end. There are thousands of people where the properties have been sold and they actually have to move. So there are still people having to move and to do things because they did things 4 weeks ago or 6 weeks ago or 3 months ago that are now coming to an end. So there are still people looking for properties to rent. I myself are in the process of building a home, and I've been told by my builder that they've got 5 tradies that can be on site and they're all working in different locations, and at this stage there's no problem with them continuing. And just around the corner I saw them deliver a whole lot of roofing to replace a roof on a house. So the supply chain's still operating, and you know, it's probably likely to continue to, because there are hundreds of thousands of people employed by the building industry who work outside and at a reasonable distance from each other. And I think that any industry that's able to continue to operate and not cause any significant spread of the virus, I think the government's going to want to continue that, for that to happen. So, but you know, things are moving very quickly, and so things can change. Now, we are putting out a regular bulletin, and we do encourage you to share the bulletins with your colleagues and family members, and any information that you feel you need, please feel free to email us, info@wealthmed.com.au, if there's something you'd like us to cover, or you want to speak to somebody, or go directly to your advisor if you want to talk to somebody. But for general things, if there's anything we can do to help you or support you, please just reach out to us, and we're here to make sure we can make this as painless as possible. So I don't have any more questions at this stage. Would anybody like to unmute their microphone and ask a question before we conclude the webinar this morning? No? Okay. Look, if you do have a question, just shoot it through to Doug or Scott. We're all our first name at wealthmed.com.au, so you should be able to reach us easily. We're all on the website as well, wealthmed.com.au, if you want to look up someone specifically to send a message to. Thank you for joining us. Look out for our bulletin. We'll send this webinar link out with our bulletin next time it goes out. I think we sent one yesterday, so maybe we'll get another one out on Friday. So thank you very much. Be safe, take care, and we look forward to working with you in the coming weeks and months as we get to the other side of this.
Thanks, everyone.
Thanks, everyone.